Alrighty, welcome to Market Plus here at the Market to Market website. Thanks for joining us. An exclusive service we offer to you, absolutely no charge to our friends who enjoy Market to Market. And by the way, if you enjoy Market to Market, make sure you mention that to your local public television programmer and make sure he puts Market to Market on his programming schedule. And this week, a special guest, Elaine Kub, joins us, one of our regular market analysts. And Elaine, a lot of things we didn't have time to talk about on the show, which we never do. That's just normal. I want to follow up with them. And here are the three things. Foreign exchange, the dollar, king dollar, a lot of people are talking about. Situation in Europe is continuing to deteriorate. Now we're off Greece and we're on to Spain. That's one thing. The second thing is the gold fall off and all the gold bugs out there who thought that would always be the safe place to be. Here we have uncertainty in the world with what's happening in Europe, and gold prices went south. And the third thing is crude oil, which really, for all the movement, by the end of the week really didn't, 30 cents a barrel. Yeah. So I mean, by the end of the week really didn't do much. $3.94 a gallon, though, was too darn high for gas, and that could be impacting the economy, which could have impacted the big sell-off we had one day this week on Wall Street, that brief sell-off. Let's talk first about those other items, though. And I want to talk first about the dollar. Obviously, we're very dollar dependent in this world. We export a lot of our product. What's your take on the dollar? How bad is the situation going to be in Europe?
You know, I couldn't really speak for the situation in Europe. Time will tell about that, but we have to think about what is the dollar going to affect the markets that we care about. I mean, probably somebody cares about European bonds, but not me personally. So,
well, I care about them if it continues to strengthen the dollar back to the levels we were at like 4 years ago.
That's the thing. It was fairly impressive over the past week how independent the grain markets or the ag markets in general were to the strength of the dollar. The dollar came rocketing up back to its 80 level.
Yep.
Which is not as high as it's been over the past year, so it can still go higher without finding some resistance. But it's not good for our entire economy. Like you say, we are an economy that depends on exporting a lot of goods to get our trade balance back into business. So it would be best if we could arrest that movement in the dollar, just as far as our general economy improving goes.
Right. It does strengthen us when it comes to buying crude oil.
Yes.
However, that's my next topic. What's your take on crude oil?
Well, here in the U.S., this week they came out with an inventory report that was bearish, but that should not have surprised anyone. The general supply and demand...
The last one was bearish, and this thing keeps going up.
The general supply and demand situation of crude oil within the U.S., that WTI crude oil contract, is a bearish situation. The things that are driving up crude oil prices are just geopolitical, concerns that are not necessarily dependent on how much inventory we have here in the U.S. And you could also say, under normal circumstances, when you did not have Iran and Libya having problems, you would also see the very cheap natural gas prices perhaps dragging crude oil down, and just the general energy sector being pretty bearish and pretty cheap by historical standards is what it should be. But at this point, if you saw it go back down to 100, that would be impressive. If I saw it go to 95, I would be extremely surprised.
All right. You think stronger oil prices are going to be here to stay through the summer?
Yes. So, like I said, it feels terrible to suggest that you would hedge energy needs when it's unjustifiably expensive, but I don't see an opportunity for it to fall back much lower. So for the next few months, perhaps hedging some energy needs makes sense, certainly against natural gas. How much cheaper could that possibly get?
True. Real quick, the gold. You got this uncertainty. You say, who cares about Spanish bonds? A lot of gold bugs do.
Yeah.
And they ran away from gold this week. Where did they go?
Into the dollar, apparently. You could see that spread occurring. But to me, gold as a hedge against risk was never, there's not a really good fundamental case for that, in my opinion. It doesn't make much more sense to buy gold than any other substance. So I don't expect to see gold return to its old highs.
Uncut diamonds are a good one.
There you go.
All right, let's go to all of our viewers who are kind enough to send us a note. And a great lady down in Healy, Kansas asked us a question. I'm not going to bother to ask it. Louise, it's a great question, and if we knew, none of us would be here. But she asked, what is the Western Kansas cash wheat market going to be on June 20th?
Yeah,
well, that's when we really can't do it. But she wants to know, because she can cash forward contract at about $6.10 a bushel. If that works for you, Louise, take advantage of it, is your advice.
Right. I mean, that's always good risk management advice, is that if you're going to make a profit, to lock in that profit and perhaps leave yourself some upside. The nice thing about marketing wheat in June would be that you don't really have a lot of time value left in options, so you could put some sort of a put strategy underneath the current price level, that 610 level, if that works for you. But I do think there's chances for feed grains. China is in a general period of restocking all of its supplies, all of its commodities. So it might be buying some wheat off of the world market and sort of support wheat prices over the next couple of months.
Some great questions from Daniel down in Kansas. Also, we're kind of specialized, I guess, in Kansas tonight. But what are key differences and concerns in cash commercial users versus non-commercial speculatives in the WTRT and the 2012 grain markets? What are your thoughts on that?
Well, my thoughts would be ordinarily if I saw this kind of a net long from the speculators in corn, over 1 billion bushels they're net long, and in soybeans, I would be very concerned about the potential for them to get washed out, particularly with the dollar going up. But in this instance, I think they will be, if they start to sell off, the commercials will probably step in because they know legitimately they really need to have coverage for edible oils for the next year or 18 months, let's say, and for feed grains certainly over the next 6 months. So I think there's going to be enough supportive interest from the commercials to make up for any sell-off from the non-commercials.
All right. Well, it's going to be interesting to see where we all wind up. A lot of questions related to what we talked about on the show. That is acreage switch.
Yeah.
What's the max acreage switch you think we could see maybe from corn or from other crops into soybeans? Is it 1.5 million? Is it maybe 2 million? I mean, it doesn't look like there's really that much wiggle room here.
Yeah, there should be, you'd think there should be about 1.5 million that could still be in play. And what's interesting is if you look at the math of soybean supply and demand for 2012, it gets really scary if it doesn't get 1.5 million acres, or if it doesn't get something like average yield, because if you do not have average yield and at least 1 million more acres than what USDA is currently projecting, then you end up with a situation of basically 0 ending stocks in 2012, and nobody else can make up for it. China is planting more corn. Corn has bought acres in China even over soybeans,
right.
So they are going to need to buy it from somebody. They're not going to be able to buy it from South America as long as they would like to. So we basically must have more soybean acres or the apocalypse will happen. I don't know.
Yeah, it's going to be interesting to see, and obviously, we'll ration this thing down, and that's what'll turn it, and that will be occurring this summer. Several questions have come in. We've got some early corn planted, as you know.
Yeah.
And there's no secret here. There's been early corn planted, and why not?
Yeah.
Because if I can get that corn done, I can sell cash corn in the Midwest for $0.50 more that I'll get for it 2 weeks later.
Well, not just that. They're not going to plant everything. It makes some sense just agronomically to have a few acres planted early, just so you have your risk spread out for the weather over the summer.
Right.
Sure. Okay. But the question, going forward, is this a problem? There is some freeze threat over the next week, but I don't think it's not going to matter to the crops that are at this young stage with the growing point is underneath the soil, and they'll be fine. That's what
right.
It sounds like, hopefully.
All right, we're out of time. Elaine, thank you so much. Elaine Kub joining us this week on Market to Market, and of course here on Market Plus as well. And if you're in an area that's not carrying Market to Market, talk to your local public television programmer and ask them, why not? Why not? We're covering the largest industry in America, and that's food production and consumption. Talk to your local public television programmer and do it today. Thanks for being with us. For all of us here on Market to Market, I'm Mark Pearson. Thanks for joining us here for Market Plus. Have a great week.